Okay, we're officially live. What's up, Nikki? Just went live on socials, streaming on YouTube, X, and of course in the Discord. Give it a few moments for people to pile into the stream. See a bunch of people joining from X. What's going on, everybody? Hope your week's been going well so far. It's Wednesday. We made it. Only 2 more trading days left in the week. Actually was taking some profit on some of my open positions before the press conference. So I'm happy I did. I know the market's getting a positive reaction here, but I'm the type of trader, I don't really like taking much unnecessary risk if I don't have to. So those that know me in the Discord know, if there's, if I got profit on the table, that's going right in my pocket right before any major catalyst. Are there times where I leave money on the table? Sure. But we don't know. We don't know that. Nobody knows the future. Because other times you'll lose the profit. You be up 40% on an open position and you decide you're going to trade that through a Fed announcement, interest rate decision. And then that plus say 40% profit you had goes to negative 40%. And then you're like, damn, I should have just took that. So you got to think about both sides, and a disciplined trader will normally take profit, at least take some profit, reduce risk, trim the position a little bit maybe. And then you can maybe, with that profit, you could put a hedge in place. Now you got some capital, which is profit that you can use to protect the downside, if you will, right? What's up, Raptor on Discord? I got over 300 people tuning in, actually. We're streaming on X and YouTube as well right now. We got a pretty good group right now, but good to see you in the Discord over here. And my friend Ninja's in the house. Rollin, hey Rollin, how you doing? And Rudel Trade, how you doing? Rudel Trade's been trading a lot of my kind of strategy, basically writing contracts and letting income come in while we wait for the contracts to expire. Kind of like squeezing the juice out of them. Could also call us theta traders, right? Anyways, I've just kind of been watching SPY and Triple Q this afternoon. Just looks like it's pulling back a little bit right now into the close. There was a little bit of selling, but of course zoom out a little bit, and it was a decent move. Looks like SPY, it did breach 690 there for a second. Let me see. Let me just check this real quick, and we're going to go over Adobe and Oracle because both of them have earnings at the same time. The data is supposed to drop 4:05 p.m. Eastern, so just in a few more minutes here. But no, okay. We both showing the high as 688.97, and TradingView says it was 690.05. So a little bit of a discrepancy between what Webull is showing as the high, the intraday high here, compared to what TradingView is showing. So that's why I like looking at both, because sometimes there's a discrepancy. Might give you a better idea of what the actual high was. Maybe take the average of the two or something. But anyways, Adobe reporting at 404. No, I'm sorry, 405. It's 404 right now. So they report in a minute. And Oracle's coming out at the same time as well. So we'll get both reactions at the same time. We'll get their EPS. We'll get their revenue. Any guidance I can find, and any commentary from the CEO or CFO. We'll find out when the actual earnings web call is with the higher ups, and we'll figure out how to get there. And then maybe towards the end, I'll show you a few trades I took profit on before the Fed meeting. Of course, I'm going to re-enter on a pullback when I get an opportunity, but patience is key. After taking profit, patience is key. You know, it really is. Okay, we're getting reactions here. Looks like I got a Fibonacci from previous on there. Just get rid of that. So far, 2 positive reactions. Okay, Adobe's coming right back down. Look at this. You got it's like popcorn popping, right? Getting some flickering candles here. So you got to give it a moment and make sure the real move's coming in. Or is it just like a volatility swing and then it reverses, go back the other way? It usually happens pretty quickly when it does that. But let me see, Oracle. See, look what Oracle's doing. Looked like it wanted to catch a bid. It was bouncing up and down like a jumping jack. And then now the sellers took control here. That's a big upper wick there, yeah. So let's give it a few more moments. So I mean it's 4:05. The data just dropped within a minute ago. So let's give it a second while these candles are flickering and starting to stabilize a little bit. Let me get the data. And of course the Fed's cut interest rates by 0.25 today, which was expected. I think the probability with the CME Fed Watch tool was like around 89%. So that's what happened. So what does that mean? Well, the interest rates getting cut means the cost of borrowing money going to go down. So you think to yourself, what kind of stocks or companies would that benefit? You're probably looking at a lot of small cap stocks that, borrow money. And now that they reduced the interest rate, it means cheaper borrowing, right? Could be hotter markets. Keep your eye on small caps. I mean, I know small caps have kind of run before recently, but, because this isn't the first time they cut the rate this year, but, just keep your eye on that and expect a little bit of volatility. So Oracle looked like it was getting a positive reaction, and then, like I say, wait a few minutes and figure out what the real reaction is going to be. And sure enough, it wasn't a positive one, which that's what led us to believe, when the price action first started, it looked like a positive one, and then all of a sudden just reversed right back down. So there's something in the earnings data that investors are not liking. So let's see if we can find out what that may be. You got almost 600 people tuning in now. What's up, everybody? It's Wednesday. A few more trading days, and we got the weekend. We can relax, recharge, veg out a little bit, maybe. Okay, so Oracle. Let's see. Let me get this data here. I'm gonna pull over this graphic from the earnings correspondent. They're always pretty quick about posting the basic stuff, I'll keep Oracle price action on the right. This is a 15-minute chart. Let me go 1 minute just because the catalyst or, the data just dropped. So I don't mind looking at it. Probably the only time I do look at the 1 minute, it's just like right when a catalyst drops. Sure, I'll look at the 1 minute because that's the only data we have to go off of from when they release the catalyst or drop the data. So let me pull this over. EPS. Looks like they did a pretty good job beating EPS too, but site investors, that's for sure. They missed revenue just by a little bit, not by much. The forecast revenue was 16.19 billion, which the expected numbers. They reported 16.05 billion. Year over year, quarter over quarter looks fine. They got growth there. So that leads me to believe that they possibly messed with the guidance a little bit. me see what I can uncover. Let me refresh my screen real quick on the other side. Then we're going to talk about Adobe. Adobe initial positive reaction, and yes, it's retraced back down a bit, but nonetheless, it's green, 2.3% right now. Let me check some more stuff on Oracle and find out when their actual web call's going to be. And I know like a couple things investors were looking for on for Oracle earnings. Getting some of this data from my buddy Shy on X. Proof OCI demand is diversifying beyond OpenAI. Evidence that last quarter's bookings weren't a one-off, and that OCI is scaling across multiple AI customers. So just a little bit of insight there. So, you know, I think that the small revenue miss is kind of what I'm seeing right now. It's a bit of a red flag for them. I think investors were, you know, hoping the revenue would be a bit better, but let's see. They're probably going to talk about the guidance during the earnings web call. And the Oracle Cloud Infrastructure, also referred to as OCI, that revenue for Oracle came in at 4.1 billion. The expectation was 4.09 billion. Look at Adobe, just faded its positive move. The sellers are selling this right now for the moment. Oh, now it's going back up. So there's some indecision going on Adobe right now. So keep your eye on that. You can go 1 minute chart on that. Get a more deeper look into the candles here. And okay, so we already went over revenue and EPS. So again, Oracle did miss revenue. That's sticking out like a sore thumb right now. Let me see what else I can find for everybody. It's almost 4:15 p.m. right now, so their earnings call could be at 4:30 or maybe 5 p.m. Eastern. I'll definitely find that out for everyone. But it's usually no earlier than 30 minutes after or an hour after the data drops. So let me see. I just want to look at a few other things. Okay, operating income. They did miss on that as well. So not only did they miss on revenue, but they missed on operating income. The estimate for operating income was $6.8 billion. They reported $6.7 billion. So they did miss on operating income. There are some other you know, highlights that they have though. RPO came in at 523 billion. That's up 438% year over year. So there are some pretty positive things in the earnings. It's just that revenue miss. That's kind of what's negatively affecting it. I think it's looking like it's possibly starting to bottom out. I'm going to draw some levels on this here in a minute. But let me post this info for Oracle. And we're going to figure out what the indecision is on Adobe. There's something up there. I'm gonna, yeah, raw on a Discord. Yeah, they missed on revenue. So that's not good for a company like Oracle. Let me look at a few other things, find out when their web call is going to be and all of that. Okay, here's some more data here. Let me just take a look real quick. Okay, I mean, a lot of the year over year numbers are green, so that's good. Let me look at a few other things here. Let me see. Oh, SNPS, only thing that did well for earnings today. Yeah, I'll take a look at that in a minute. Okay, I got some commentary from the CEO. All right, his name's Larry Ellison. He's also the I'm sorry, he's the chairman and the CTO. Oracle sold Ampere because we no longer think it is strategic for us to continue designing. Okay, so that's a bit of news right there that they sold that off. Manufacturing and using our own chips in a cloud, in our cloud data centers. So they're cutting ties with Ampere. And then he goes on to say, we are now committed to a policy of chip neutrality where we work closely with all our CPU and GPU suppliers. Of course, we will continue to buy the latest GPUs from NVIDIA, but we need to be prepared and able to deploy whatever chips our customers want to buy. There are going to be a lot of changes in AI technology over the next few years, and we must remain agile in response to those changes. Okay, so those are some pretty solid statements there to give a little clarity on what their vision is. And there's some more commentary here from Clay. The person's name's Clay. This is the CEO. So the chairman. So there's a chairman, CTO, that's Larry Ellison. And then there's a CEO, and that person's name is Clay McGurk. Clay says, Oracle is very good at building and running high performance and cost efficient cloud data centers. For years, Oracle has been investing in AI and building autonomous cloud software. Oracle's autonomous database and autonomous Linux have been key to reducing human labor and human error in our data centers. Because our data centers are highly automated, we can build and run more of them. Okay. Oracle has over 211 live and planned regions worldwide, more than any of our cloud competitors. It's a pretty big statement there. We are more than halfway through building 72 Oracle multi-cloud data centers to be embedded throughout the Amazon, Google, and Microsoft clouds. That's amazing. We are committed to cloud neutrality because we believe that our customers should be able to run their Oracle databases in any cloud they choose. That strategy is definitely paying off. Our multi-cloud database business is our fastest growing business, up 817% in Q2. Jeez. But again, negative reaction on two things I noticed. The most obvious, they missed revenue forecast. The second thing, they missed operating income forecast. And you know, and then they said that they sold Ampere because they no longer think it's a strategic thing for them to continue designing and manufacturing and using their own chips in their cloud data center. So 3 pieces of data here probably has a lot to do with why they got the negative reaction. Let me draw a fib on this and just see where we're at with the levels. I'm not going to count this top wick because that wasn't the real move, was it? Just going to go from the top of the body of this candle here. Actually, let me draw it from here to there. Yeah, this looks good here. So it came up to 50% retrace here just a few moments ago and got rejected there. Pretty clean rejection, I suppose. That's right around 215 a share. So literally just got rejected from there about 4 minutes ago. That's probably, you know, for shorter term price action or post-market price action for the time being, 215 a share. There's a level there of interest. So for the bulls, I'd feel a lot better if it could get back above 215. Maybe it'll have a better chance at retracing back up to where it closed the regular session, which was at $223.01 a share, trading at just below 212. Well, it's at 212 a share right now, so it's down like $11 a share, 5%. Support, we could look at this 25% retrace. That's how we know it's not going to be a dead cat bounce usually, but sometimes the cats bounce a little higher. So you got to be careful there. But that's around 210.50. Coming down to test that right now. And then support level number 2, pretty obvious, the after hours low. It's around 206 a share. That's what I'd be looking at if I was trying to trade this with limit orders right now. On the bigger time frames, I'm going to get rid of this intraday fib here. On the bigger time frames, let's just look at where a lot of the volumes come in over a certain period of time. Take a little look at this. So, okay, this is price action from like April. Okay, so it's going to be April, May, June, July, August, September, October, November. I mean, this is 8 months of price action. You can see it down here. So yeah, I mean, on the bigger time frames, and it's right where the price action kind of bottomed out here, lines up with the volume profile pretty good, right around the mid 190s. I'd be probably looking there, maybe 195. From where the price is at now, keep it simple. $200 mental level. A lot of investors will be looking at 200 for support probably. Nice even number. So I'd say support levels on the bigger time frame. I mean, I'm going to mark these out just so I have them there in case it doesn't bounce quickly, you know, in after hours or something. Let me take this magnet tool off. And it looks like Adobe's selling off again, so I'm going to go over there in a second. But I like I like 200 from where the price is at now, right around there. And then probably 195. Little $5 away from that support there. I'll just put that right there. That's fine. Those are the levels I'd be looking for a bounce if it doesn't bounce in after hours tonight or pre-market tomorrow morning. This blue line, this is where the price is at now. It might be hard to see on my screen, but this is the daily chart. So I'll go back intraday. Okay. Yeah, it might be forming that bearish lowercase h pattern. We trade these a lot. You know, unless a higher low prints right here, they're probably going to come down to low a day, which is right around 20, or you know, after hours low 206 around there. I'll put that fib back on from the for post market price action, just right there. Okay, so it lost 25%. That was 210.50. So yeah, after hours low 206. That's shorter term level we can watch. And if that fails, 200, 195. That's where I'm looking. That's where I'm looking. And again, their earnings weren't terrible. I don't think their earnings were you know, horrible or anything. This could be a short-term pullback. That you know, let's take a look at the income statement and balance sheet from, you know, what condition the company was in going into this earnings. PE ratio, obviously a bit on the high side because they're in tech, but trailing 12-month 51. They pay a tiny dividend, 0.9%. I guess that's better than nothing. They probably pay that quarterly, I would think. Yeah, October was the last one, and then July. Yeah, so quarterly dividend payment there, just tiny one, but better than nothing, I suppose. 1.6 billion free float. It's the income statement. That's what I want to say. Okay, so going into the earnings, the year-over-year growth on the net income has been going down. You can see this orange yellow line here. So it has been trending down. But nonetheless, they are a profitable company. They're making money, positive net income in the billions. Okay, as you range from like 3 billion to maybe 3.5 billion a quarter in positive net income. I mean, solid company. They make great money. The balance sheet, 86% debt to asset and declining. Yeah, I mean, it's fine. CMS cash and equivalents. Yeah, tons of cash and equivalents. As of August 31st, $11 billion in cash and equivalents. That's good. Property, plant, and equipment. That's like more hard assets. 53 billion. So it's a strong company. There's a reason why they're trading up here in the 200s, and not financial advice, but I mean, ever since we got out of that correction that we experienced from like February to April, we've been in a dip buy environment, have we not? There's lots of money, lots of people making a lot of money buying dips from April to present. I'm not saying that's what you should do, but I'm just saying that's the environment we've been in for a little bit now. We just took a quick peek at Oracle's income statement and balance sheet and debt to asset. Positive, they have positive PE, positive EPS, pay low dividend. I mean, I like the company. I like the fundamentals. I think this can be short-term pullback on them. Here's some more commentary. It's almost 4:30. Just a little bit more commentary on Oracle. This is from the CEO. His name's Mike Sicilia. AI training. Oh, wait, hold on. I got a question on YouTube. Oh, okay. Drone on YouTube. Nice stream, my friend. I'm calling it short-term pullback as well. Yeah, I mean, that's kind of what I'm seeing, you know, and I didn't really dive deep into it like I normally do. But I could see this definitely being a dip buy. There's money to be made here, I think. Now, you know, it's for everyone listening. Just be careful. You know, you gotta get your allocations right. Don't over allocate on anything. Make sure the bottom comes in. Make sure to spot some higher lows printing on the candles. You know, let's get some good candle prints. I'm willing to sacrifice a little bit of the reversal move to ensure that the selling has stopped or at least slowed down, which I can combat. I mean, even if it hasn't completely stopped, as long as it's slowed down a little bit, I can usually combat that by, you know, DCA and stuff like that. But, you know, I think there's money to be made here. The earnings don't look bad. They just, you know, they missed on operating income. They missed on revenue, but not by much. You know, they didn't miss by much. And it's still a fundamentally sound company, in my opinion. I was going to read some more stuff about Oracle. I'll just say a few more things about it, and then I want to jump over to Adobe. There's just indecision on Adobe. It's basically after pumping up in above 360 and then coming all the way down to the 330s, it's now back to, I mean, it's trading in after hours just above where it closed the regular session. So talk about indecision on this one. So be on your P's and Q's with Adobe. Not really quite sure which way this is going yet. Maybe investors are waiting for the earnings web call to get more clarity on the guidance and stuff like that. But there's a few more things about Oracle, and then we'll find out what happened to Adobe. There's obviously some mixed messages going on there with their data. But Mike Sicilia, Oracle CEO, said AI training and selling AI models are very big businesses. He says, we think there is an even larger opportunity embedding AI in a variety of different products. Oracle is in a unique position to embed AI in all three layers of our software products. Our cloud data center software, our autonomous database and analytic software, and our application software. All three of these Oracle software businesses are already big. AI will make them all better and bigger. Kind of sounds like Trump or something, you know, everything's grandioso and big. AI allows us to automate complex multi-step processes that were impossible to automate before AI. AI is enabling us to automate loan origination and risk quantification for banks and their customers. And just to wrap this up here, AI is enabling us to help doctors diagnose and care for their patients and manage the reimbursement process between healthcare providers and payers. All of the top 5 AI models are in the Oracle cloud. We have huge advantages over our applications competitors. So that, that kind of gives you a look into the mind of the CEO, and what their feelings about the future. And this is a big deal what they're doing. So again, I agree with my buddy Drone on YouTube. I think it's going to be a short-term pullback, but be smart about it. Okay, nobody wants to catch a falling knife. So just wait for some higher lows to start printing. Wait for some buying pressure. If you're going to check some indicators, maybe watch for some divergence on the RSI or the MACD. Usually those are pretty good signals. And then, if you're a long-term, Oracle investor, or you want to be, there's nothing wrong with taking a couple nibbles here and there to test the waters. Like dip your toe in the water, right? Make sure it's warm. And then maybe set yourself up on a monthly investment plan, stuff like that. Nathan said I was in long term and that hurt. Yeah, I mean, it's down $14 a share. It's down 6.5%. It's not getting hammered or anything like that. I mean, we've seen some of these tech companies, sell off, 15, 20%. It's like, holy cow, what just happened? This is manageable. Okay, this is manageable, and especially if you're a long-term investor, this shouldn't bother you too much. Let's see what their we go to weekly chart here. I mean, this stock was in the mid 300s not too long ago. This is the weekly chart, by the way. So, if anything, I think long-term investors probably going to look at this as a little bit of a discount. And another thing, it's long-term investors, I'm looking at the weekly chart. Obviously it's come down from the 300s, and I know no one wants to see that drawdown on their account every day. But one thing to take in consideration, look at this big gap it had to fill. That was a huge gap from September. That was a positive reaction from their earnings on September 9th. So yeah, if you bought in up here, you might be having to do some damage control. I know it's a $200 and something stock right now, but if for whatever reason you had 100 shares, you could have been right. Anyone could have been writing covered calls on this to reduce their cost basis, at least bring in some income while you wait for shares to appreciate. And I know it's not fun seeing this negative reaction to this earnings right now, because it looked like it was wanting to pop out of this downtrend, didn't it? It's been downtrending since maybe about 2 months ago. So I know, the month of October and the month of November for Oracle bulls, hasn't been pretty. And it did start popping out of this downtrend, and it looked pretty promising going into this earnings that they were going to start going the other way. But now we got a pullback with this earnings. Now again, not really a bad pullback. I mean, it's down 6.5%. I get it, but we've seen a lot worse than this, and I do like Oracle long term. It's a solid fundamental company, not financial advice, but I'm considering taking some nibbles down here in the low 200s. Obviously, investors thought this was a level of value here, and when it dropped below 190 for that one trading day here, this was November 25th, dropped below 190. That dip got bought up pretty quickly, didn't it? Started trending up from there. Now they need to weather the short-term storm with them missing revenue. But I think they'll be okay long-term. It's not like this company is not making money. Very profitable company. they're just missing some of the forecasts with revenue. So I don't think it's all doom and gloom. And yeah, it's trying to bottom around 206. And again, just based on previous price action on the daily chart, I'd be looking at, you know, if that fails, I mean, you can clearly see it with the volume profile. Look at all this volume that came in at 200 right here. 200 might be a good deal on this stock for sure. I like it at 200. It may not even come back down there. Like my buddy Nathan said on YouTube, as far as like the shorter term view and post market price action, it's looking like it may bottom at 206, but we need this to turn into a double bottom bounce to confirm that. We'll see if that happens, and then after that, if it starts printing some shorter time frame higher lows, it's you know, it could look good going into pre-market data tomorrow. Again, this is just shorter term looking view here, just based on price action. Now that the catalyst is out of the way, you know, we can put a little more weight to the price action. Right before the earnings data dropped, technical analysis kind of goes out the window. But now that the data's out and we're getting the investors' reactions, now we can start looking at volume and price action again. All right, let's talk about Adobe. They are slightly green. Let me check the Discord and make sure I didn't miss anything on Discord. Okay. Adobe. What's going on with ADBE? Let's take a look here. Okay, Adobe beat revenue. And their adjusted net income, they beat that line item as well. Adjusted operating income, they beat that as well. So got some positive data from Adobe here. They got a double beat. They didn't beat by a lot. Their forecast EPS, or the expectations for the EPS, was 5.40. They reported 5.50, so they beat that. Revenue expectation was 6.11 billion. They reported 6.19 billion, so double beat Adobe. Year over year, quarter over quarter, there's some growth there. Year over year has double-digit growth. Quarter over quarter, single digit, which makes sense. Let's see what else I can find. Oh yeah, let me find out when Oracle is going to do their earnings web call, because I know a lot of people are here for Oracle, and who knows, maybe they get a secondary move at their earnings web call. We see that a lot. You'll get a secondary move when they start talking about the guidance in more detail. Investors like what they're hearing during the earnings web call, and they start buying. We see that a lot. So, you know, don't think this is, you know, that this reaction isn't fully done yet until that earnings web call is done and investors have time to digest the data, especially big money institutions, hedge funds, that thing, maybe angel investors, or, you know, sometimes it takes a little bit of time for them to decide exactly what they want to do moving forward. And all right, let's see when their call is going to be, because like I say, I'm going to turn this volume profile off just so I can move the price over. Okay. And let's see when their call is going to be. Okay, so right on their homepage here, I'll post a link for everyone. This is how you're going to get to the earnings web call. And this is, and also if you go to this link, this is if you want to take a deeper dive into their earnings data. I kind of just went over a lot of the base, you know, a summary, if you will. Let me post this link in Discord as well for everybody. There you go. So if you want a deeper dive into their earnings, then you can probably just click this earnings release. There's a PDF document you can download. We can just take a look. Yeah, it's a 10-page PDF document for the press release. And then they also have another PDF document for the financial tables. But a lot of this stuff we kind of already touched on a little bit. but and especially the commentary, just from what I was telling everyone before. And their conference call is at 4 p.m. Central, which means it's at 5 p.m. Eastern. Okay, so if you want to watch the Oracle earnings web call with the higher ups, it starts in about 20 minutes. All right, so you got a little bit of time before it starts. All right, so now that we know when their web call is and how to get there, I want to see what's up with Adobe. We started talking about that a minute. I kind of jumped back and forth because I forgot to figure out when the web call was for Oracle. So let's go back to Adobe. And we went over, so Adobe had a double beat. They beat EPS, they beat revenue. There was growth on for year over year and quarter over quarter. There was growth there, so that's good. And let's see if I can find any guidance or anything like that, and then we'll find out when they're going to do their call. All right, let's take a look. And also with not only did Adobe beat EPS and revenue, but they also beat the forecast for net income. They beat the forecast for operating income. They got beats on a lot of line items here, so good for them. They also increased Q1 guidance. Okay, the estimate for Q1 guidance was 6.24 billion. This is for Adobe. Let me go to click on Adobe and make sure the price is over there. So Adobe closed the regular session at $343.13 a share. They're trading at $345 and some change, so they are slightly green. They're up $2 a share. But the Q1 guidance, the estimate was 6.24 billion. They raised it to 6.28 billion. So Adobe raised guidance for Q1. For fiscal year 2026, they also raised the outlook. The estimate was 25.9 billion. They raised it to 26 billion. So slight raise for 2026 outlook, but nonetheless, they raised it. I think the biggest guidance raise is going to be EPS. They raised that by over 10%, and that's for 2026. For Q1, the estimate for EPS was 5.66. They raised it to 5.88. For 2026, the estimate was 20.80. They raised it to 23.40. So Adobe double beat. They beat EPS. They beat revenue. They raised Q1 guidance and 2026 outlook for sales and EPS. So the earnings look great. I don't see anything negative yet. The price, like I say, it's not obviously catching the bid, but it's not selling off either. It is slightly green, a bit of indecision. I think investors want more clarity about the guidance. So let's find out when they're going to do their earnings web call. And okay, you know, one thing that could be hurting Adobe is there's a potential for them to get disrupted by AI. That could be looked at negatively. Well, you know, if an investor believes that, it is going to be looked at negatively. So just something to keep in mind. But the numbers that they're reporting, it doesn't look like they're getting disrupted by AI. So that's the positive thing. So kind of two looks there on both sides of the coin. Adobe delivered an outstanding year fueled by strong global demand for AI solutions. Let's see. Okay, I do have a little bit of commentary here from the CEO. Maybe this will clarify what's going on with Adobe. All right, so Adobe's record fiscal year 2025 results reflect our growing importance in the global AI ecosystem and the rapid adoption of our AI-driven tools. So again, AI is not disrupting them. They're actually embracing it. All right, and that was said by Shantanu Narayan, the chair and CEO. And they also say by advancing our innovative generative in agentic platforms and expanding our customer base, we are excited to target double-digit ARR growth in fiscal year 2026. I'm going to put Oracle's data on the bottom of my screen while I'm talking about Adobe, and then I'll post Adobe. A couple statements from the CFO of Adobe. His name is Dan Dern. Adobe delivered another outstanding year, fueled by strong global demand for our AI solutions across business professionals and consumers and creative and marketing professional consumer groups. Say that 3 times fast. He says, looking ahead to fiscal year 2026, we are confident in our ability to deliver industry-leading innovations, double-digit ARR growth, and world-class profitability. So kind of mirroring a little bit what the CEO said. But then it sounds like they're very optimistic about the future, and hence why they increased Q1 guidance and they increased the fiscal year 2026 guidance. So the earnings look good. Not really a lot of buying going on right now, though, is there? They're up $2.21 a share in after hours, but they are green. Better than what Oracle's doing right now. Oracle's still testing that 206 area. We'll see if that holds. 206, 205. I like even numbers better. You know, just like easy to remember incremental numbers. Okay, let's see here. Let's see when Adobe's going to do their call. I'll just go right to their investor relations page, get it right from there. Okay, let's take a look. I'll keep Adobe's price on the left here. All right, latest quarterly results. Let me post this link for any Adobe investors that are listening in on the stream right now. I'll put this on the bottom of my screen. Leave it up there so anyone can screenshot that. Put it in the Discord as well. Press release. Okay, it's a 9-page PDF document, so not too crazy. I was doing earnings yesterday. The company had like a 36-page PDF document. It's like a bit much, but only 9 pages on this one, and a lot of this we kind of already went over with the EPS and revenue and the guidance. So if you want a deeper dive into their earnings, just go to that link on the bottom of my screen, and right on the home page you can get this 9-page document I'm looking at right now. Couple highlights. Adobe delivered record operating cash flows of over $10 billion in fiscal year 2025. Okay. So let me find out when their earnings web call is going to be. So right here, yeah, that same link I just gave everyone, right on the home page. Scroll down just a little bit on the right. See right here, it says watch webcast. We click on that. We'll find out what time it is. Okay, 2 p.m. Pacific time. So that's going to be 5 p.m. Eastern. So the earnings web call for Oracle and the earnings web call for Adobe are both at the same time. So you got to kind of pick, you know, which one you want to watch, unless you can multitask and watch them both at the same time. But if you sign up for the web call, you'll probably get a recording of it, I would think. So maybe you can watch one live and then watch the other one after. All right. But yeah, it's almost 5 p.m. I did take profit on some trades before the Fed interest rate decision catalyst, if you will. And one of them was the trade I was going over at the end of the earnings stream yesterday, which was we opened up a bullish spread on Disney. I'll just show everyone what that looked like real quick. So we opened up well, it's a neutral to bullish trade, because Disney could have just traded sideways and I would have won the trade. But this was a screenshot I took right after I opened it. But this paid 28% return on capital, and I had almost 50% of the profit on the table today before the interest rate decision data dropped. So I took profit on that. That was an easy trade. I had 5 spreads. We collected $28 a spread on that one. So that was a fun one. And what's another one that I took profit on? Oh yeah, I had $8.50 cash secured puts on Bull, which is Webull, ticker symbol BULL. I got $28 a contract on those cash secured puts when I opened them. I opened them 9 days ago. Expiration date was December 19th, so not this Friday, but next Friday. But I figured, that profit was just staring me right in the face, and I got 85% on that trade. So, but those were fun, and I'll keep trading those companies and re-enter on a pullback and all that fun stuff. But if you want those, these trades in real time, I alert them to the Discord. I got over 100 people in my coaching group right now. I specialize in writing contracts. Most of my trades are sell to open. So if you've ever been interested in that way of trading, join the Discord. Tag me in the chat. I go by TheSwingingBull in the Discord. My real name is Benjamin. Most people call me Ben. But yeah, if you're looking for a new home, check us out. You can join for free. Also, another free thing that we give out, doesn't cost any money. If you want 4 high probability trade setups sent to your inbox every morning at 9 a.m., check the first link in the description. Doesn't cost anything. We've gotten really great feedback on those watch lists and those trade setups. So check it out. But yeah, I had a lot of fun streaming today. Tomorrow should be a fun one. Tomorrow we have, let me see if it got put in here. Yeah, we got Broadcom, which is AVGO. That's tomorrow. And we also have Costco, ticker symbol COST. So those are the 2 I'm going to be going over tomorrow. Pretty excited for those 2, to be honest. But yeah, if you enjoyed the stream, give us a follow. Hope everyone had a great night. And until next time, I'll see everyone in the very next stream. Cheers.